Have you been losing money in the market for quite a significant amount of time? Have you been losing so much of your capital and then always reinvesting into the market without having profit? This video is for you. So without further ado, let's just dive right into it. Hello everyone, my name is Aramdela. Welcome back to the channel. And in today's video, I'm going to be explaining to you the reason why yes, I mean why you keep losing so much money in the market. So first and foremost, the most important thing that I'm going to be talking about is discipline. Discipline is a general factor to which a lot of people lose out money in the market. But first of all, let's talk about patience. Now, a lot of you guys have good strategies. You know that when the market presents itself and you find out that your trade opportunity is being set, you are taking the trade. But guess what, guys? You realize that you get wigged out or you blow your account, and then guess what? The market moves right in your direction. So I'm going to be showing you an illustration on the chart to help you to know how to be patient so that it can stop you from losing money in your trading journey. So without further ado, let's dive right into the chart. So for example, this is the chart on silver. All right, it's denoted as XAGUSD. So for example, let's say you trade chart patterns, right, and then maybe you've identified this descending wedge. Now we all know from our textbooks, just like in my earlier videos, we all know that when price is in the descending channel, right, so for example something like this, right, so when price is in a descending channel, it means that we are going to be taking trades, right, we are going to be waiting for price to break, retest it, and then what, continue, meaning that we are not going to jump in at the retest at the impulse move. We are going to be jumping in at the retest area. So we are going to be patient and wait for price to retest. But a lot of you guys see the market pushing to the upside during the impulsive phase, and then you feel like, no, the market is moving, so let me jump in. And guess what? As soon as you jump in, then the market begins to go against you or go in the opposite direction. So how you're going to solve this is as simple as that. Let's dive right into it and let's look at an actual chart. So for example, this is on the 7 minutes time frame. I just did this for illustration purposes. So let's say you're waiting as a trader. Now guess what, guys? I am very confident that a lot of you guys who haven't seen this on, maybe this spike was once a candle. So most of you be like, oh, the first touch has occurred, the second touch occurred, and this touch, and then what, you feel like the market is already moving. Because remember, before this spike closed as more of like an inverse hammer, right, it was actually a full candle. So you'll be here thinking that, oh, it's time for me to buy. And guess what? As soon as you buy and then you target your areas and then have your stop loss maybe at a significant zone, guess what happens? The market just reverses against you, and now you get caught up in a trap, and then the market begins to go against you as soon as you enter the trade. And then you begin to get confident again, and then guess what? You're now like, oh wow, this is an opportunity for me to enter. But again, right, we've already told ourselves that what we definitely want to be entering the trade at the what, at the retest, not at the entry. So let's say you decided to enter this trade again, right, maybe at this area, right, and then let's see what happens. The market goes against you just right when you decided to do what? Just right when you decided to take the trade. But if you realize, right, if you look at it even on a smaller time frame, you realize that what, it was the retest move that allowed us. So you could see that price actually tapped into this trend line, more of like a retest move, right? So you would have been more confident to take this trade right at the retest move, or maybe at the closure of this candle, because you could see that price retested this move. But if you're not patient to wait for the candle closure, right, so a lot of you guys would be literally just jumping into the trade right when you see the candle push above. No, that's why I really don't like pending orders, right? Because I really want to see the structure of the market, because the candles tell the story. You really want to see what exactly that the market is telling you. So I'm definitely going to be patiently waiting for price to close, and then I'm going to be waiting for a retest. The retest could have happened on a very, smaller time frame. Let's look at the 3 minutes. You can see that price retested with rejections, and then we saw a strong bullish candle, and then we could have gotten in over here for a good buy, and then we'll see how price definitely gets into our favor, TP hit, and then we are done. So this is as simple as everything is. But the reason why you keep failing, or the reason why price keeps banking into your stop loss, is as simple as possible. You are not patient for price to do what it has to do, so you are quickly in a hurry to jump. So next time, advise yourself, tell yourself that, you know what, I'm going to be patient, I'm going to wait for my setup to play out. I'm going to wait for my confidence to be solid enough for me to enter a trade. This is very, very, very important. Now, another factor, which will be the last one because I don't like to make long videos, would be over trading. Most of you guys, I can definitely bet that you do so well. You make significant amount of pips in a day. Some of you make about 120 pips in a day. But guess what? You find another opportunity and then you begin to take another trade. And guess what? You lose all that 120 pips that you have taken. So this is simple. This is simply because you do not have a plan. You do not have a laid out routine of how much you want to make within a day and how much you are willing to risk within a day. Most of you guys actually go for prop firms accounts, and then you already see that they have a well laid out route for you. They tell you that you need to make 8% in a month. You need to lose not less than $500 in a day. So if you would begin to apply that same analogy in your trading journey, it's going to help you a lot. If you have $1,000 account, tell yourself, what is my target daily and what is my maximum loss daily? If let's say you have $1,000 account, you tell yourself that you want to lose not more than $50 or not less than $100 in a day. Once you hit your negative $100 in a day target, you are done trading for the day. And let's say if you make $200 in a day, you are done trading for that day, no matter what. So let's say one setup gives you that $200. No matter how juicy other setups are, you are definitely done for the day. That has to do with importance of what discipline. It takes discipline to actually become successful in this market. You cannot run from discipline. You're going to get lucky sometimes one or twice just by flipping account. If you want to stay consistent in the long run, then you need to stay disciplined. You don't need to be over trading. You need to give yourself a set amount of rules that is going to help you to become successful in this market. So without further ado, this is the end of this video. I'll see you guys in the next one. Thank you so much for watching this video. So if you're not part of my Telegram community, please do well to check the link in the description box to join my Telegram community, and follow me on Instagram at Ariamdela, on Twitter at Ariamdela, and all other social medias. I'll see you guys in the next episode. Peace out.